Welcome back to Now Time for Your Money. We're joined as always by David Nelson of NelsonCorp. Good morning, David.
Good morning, Roderick.
Glad to have you here be with us today.
Appreciate
it. And let's talk about the Tax Cut and Jobs Act. It went into effect, of course, on January. How does this impact people specifically?
Yeah, so it's the biggest overhaul in the tax code since 1986. So this was a massive undertaking, and it's temporary. That's another thing that's kind of a surprise to a lot of people. They don't realize that this isn't going to be a permanent thing. It's temporary on the individual side, and it's supposed to be permanent as far as on the business side. The problem is you get a new group of legislators that go into Washington, all of a sudden it's kicked out, and we start over anyway. So we tell people, plan on it being temporary. There's some nice opportunity that exists in here. Probably the two biggest things that I wanted to focus on was that the standard deduction has doubled. So they've taken away a lot of deductions in this change in legislation, but they've doubled the standard deduction. So net for many individuals, that will be a really positive thing. The other one is that tax rates have actually dropped. So if you look at the tax rates yesterday prior to this change in legislation, you look at it today, what you find is for most individuals, they're going to be 2 to 3% lower as far as that bracket. So when we bring it all together, for most individuals, they're going to be paying less income tax than they did the prior year. Most individuals saw a little bump as far as in their pay if they're still employed early in the year because the tax rates dropped. And so that was implemented at that point in time. But net should be pretty good news for most individuals out there.
Yeah, good news indeed. And with the year coming to an end, what are some things that individuals can still kind of take advantage of at this point?
So the obvious ones would center around 401k contributions, making sure that they're putting in as much as they possibly can. And I know we've talked about this in the past. Nobody has extra money, but we have to find a way. We've never had anybody, as far as when they get to retirement, say they save too much or they start too early. So we encourage you to put in as much as you possibly can. So the 401k would be the first. If I don't have a 401k or a 403b or a simple retirement plan with my employer, I should consider an IRA. And there's many individuals out there that would certainly apply to. So that's a nice one to look at. Charitable planning. Charitable planning has changed. In the past, when I gave away money to charity, for most individuals, they could deduct that. For most individuals going forward, it's going to be a big question whether they're going to be able to deduct that or not. So there's things that individuals can do as far as in that area. You'd certainly want to talk to your tax people as far as some ideas in this area, but charitable planning is certainly one of them. Another biggie that people really need to take advantage of is tax harvesting. So when most people think of tax harvesting, if they've heard that term before, and some people haven't out there, is the idea that individuals are going to sell a security, stock, bond, land, whatever the case may be, and if they have a loss, they're going to use that loss as far as to reduce their other income. They can also do it the exact opposite. In other words, if they have something that has a gain, they can look at selling that. Well, why would somebody want to do that? Because if you understand the tax law, you can make a large sum of money and be in a 0% capital gains tax bracket. I mean, that's spectacular. And most individuals aren't aware of it. And so again, they could have a gain on something and they haven't taken advantage of liquidating that thing and putting it on their tax return and paying a 0% tax bracket as far as on that block of money.
Wonderful stuff, David. Thanks so much for joining us as always.
Glad to be here.